Morning, everybody. It's the 7th of September. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Good morning, mate.
How you doing?
I'm not too bad, mate. Yeah.
Fully
I
into
suppose it.
holiday mode yet?
Yes, I am actually. Yeah. It's really it's quite. I don't know. It's not relaxing going into holiday mode because there's so many things you need to get done before you get into holiday mode, and
Yeah.
I think there's been a load of video and stuff I needed to do, and that's been quite annoying. It's taken me a
Never
lot
mind.
longer than normal.
Be putting your feet up for the next 10 days anyway.
Yeah, hopefully, yeah, that will be
Good.
something to look forward to.
Cool. Okay, let's get stuck in then. So, in terms of overnight, China's export growth unexpectedly surged in August with demand from the US and Europe resilient as retailers probably brought forward their Christmas shopping orders, according to the Bloomberg article read this morning. Pickup came despite disruptions at China's second largest port last month. So, looking pretty good on that front. Europe, however, is facing an energy price shock as a supply crunch lifts the cost of producing power just as more businesses begin to reopen and people begin to return to the office. So we're all starting to see a big bottleneck, I suppose, in in demand for certain things as a result of everything beginning to reopen. Having said that, there was a bit of a report in the news today about some sort of plan being put in place for the UK about an extended fire break. Um, I don't think they're calling it a lockdown, but where the half term might be extended by a week.
They're just getting
Um,
lazy, these people, I think, aren't they? Just any excuse
yeah,
to have a little holiday.
quite possibly. Talk of bringing masks back as well this month with
Oh, get it out of here.
hospitalisations
It's not going
and
to happen.
that's the thing. Everybody's sort of fatigued by it all now, aren't they? And
Yeah,
it's going to be
I think
hard
that's
to
it.
get people back, back to doing those things.
Yeah, we've been pushed over the edge. We've been forced to vaccinate ourselves, and now we're standing up for ourselves. I think now is that the way to put it? Where people are fed up,
Yeah,
and
absolutely.
you know, um, are sort of ready to march on the Capitol. Come on, let's march on the Capitol.
Yeah, Trump calls to arms. Get us all.
Yeah, he'll be back soon. Don't
Yeah, oh
worry.
yeah. Haven't heard much from him at all, have we?
No, they're all the news media outlets are sort of like trying to keep a lid on him, but
Yeah,
he'll be back.
I'm sure. The other thing that I noticed today, which was quite interesting, and maybe there'll be something on the charts that will be able to indicate that. It doesn't look like much at the moment, but the Reddit gang look to be targeting Bitcoin. So not exactly, an out of the blue target, but some platform users are discussing plans to buy around about 30. Um, $30 worth, I think, en masse. I don't know how much of an impact that will have because there's a new law coming into effect in Latin American country El Salvador. Um, so there is a bit of evidence of a bit of a notch up in volume, but doesn't seem to be doing an awful lot to the price at the moment. So we'll come on to that in a minute anyway. So chart-wise, Steve, anything that caught your eye yesterday? I imagine not because it was a US holiday, so it was all pretty flat. I mean, out of the 40 markets that we analyse on a daily basis, only 2 of them actually got triggered. So
Yeah,
maybe a bit more
wasn't great,
interest
was it?
today.
I was actually thinking, did we set the alerts yesterday? But anyway, Bitcoin,
You need to share
you've
your
mentioned
screen,
it.
Steve.
Oh, of course I do. Yeah, you mentioned Bitcoin. You've opened a can of worms there. So Bitcoin we were talking about this head and shoulders formation, which never transpired because we needed to get a break of the neckline. It didn't happen. It bounced off the neckline, forming a double bottom, even a triple bottom, you could say. But even the double bottom, the measured move target of the double bottom, as I prepared in a video earlier, comes in at 54,331. So I like it, the fact that the Reddit guys are sort of all clubbing together and are going to sort of push this price higher. Remember, you need some follow through to take profit. Don't get caught holding the baby. We've got resistance up here. We're looking at the measured move target 54,331, and we've got 78.6% fib at 57,000. Also above that, we've got the obvious 60,000 and the all-time high just coming in under 65,000. So looks all pretty positive. Even if we drill down to the hourly chart, look at this previous swing high at 51,000 will form support because it's got the Ichimoku cloud, and it's also this break of support was retested and bounced off nicely. So I expect that to hold again. So nice support down at 50,500 to 51,000. Stops below there probably, but still targeting a move higher. Also the ATR showing probably a nice level to fade is around about the measured move target. So that looks pretty good. Commodities, you're going to look at a couple more than just the oil and the gold, but we start with oil. Obviously, we got this chart formation on the long-term chart, which is a bit scary looking. We formed a doji candle last week, so that hints at potentially a bit of a reversal, although that probably goes against the news sentiment, which is probably quite positive on oil. But the technical's not lining up with that. We've got downward trending resistance, which we've tested. The upward trending support, which has turned into resistance, was also retested over the last few days and has reversed lower. So still feeling a little bit negative on oil, although it, like I say, all the news coming out doesn't feel like that. Gold, always believe in gold. This is reacted from the resistance level. Again, 1834 is the resistance level. We're under a bit of pressure this morning, down to 1816. Support coming in at 1810. Also will probably come in at this 4-hour support coming in around about, well, that is 1809. So not far away from there. But yeah, under a little bit of pressure at the moment, and really looking to buy dips in there and sell rallies in front of 1834, as we've been talking about for the last few weeks. So not much change. Two markets I want to look at are aluminium and wheat. We'll look at wheat first. Now, wheat, let's get a proper chart on wheat. So wheat is the most important food that the humans can consume on a mass basis. And obviously over the last 50 years, the world population has doubled. Wheat production has actually tripled. This is all from my script this morning, Joe. So I know everything about wheat.
I love this. I love this.
So what we've done, we've seen from 2016 to 2020, we saw prices increase by 53%. Since then, so since October 2020, in the last year, it's increased by another 50%. So that's almost 100% since 2016. And obviously it's affected by oil prices also in the production and the transportation of it. But yeah, it's as the world population grows, we obviously need more wheat. So we need to feed us little humans. Aluminium has seen a similar sort of thing in the last year. You can see we've seen an increase. Oh, let's not get a buy trade idea, dear oh dear. Buy trade idea at the all-time highs. We've seen a 90% increase since April 2020 in aluminium. The reason for that is mainly because it's used as food packaging, which is increasing. So as the world population grows, we need more food packaging and aluminium is the most common metal found in the Earth's crust. Did you know that? However, there is a flip side to it as well. China effect. So China is the biggest producer of aluminium. However, it's got to cut its carbon emissions. So it's stopping producing aluminium, which then leads on to another multiplying effect on the price of aluminium. All of these prices, wheat, aluminium, all get passed back to Joe in the street, back to us poor consumers, so that the manufacturers can remain profitable and live in their penthouse suites. So yeah, that's it really for the commodities. Just thought I'd highlight that.
That was fantastic, Steve. It almost sounded like you knew what you was talking about for a while there.
I did. I have done, I don't know, 300 retakes, so I do know it pretty much off by heart. But it's quite. I thought it was quite interesting to sort of.
It is, putting particularly when it comes to commodities, and put them to real world examples of where they're being used, and how prices are being affected by these things is, I think, really interesting. So I learned a lot there. Thank you, Steve.
Yeah, no worries at all. We'll more of that to come, hopefully.
Yeah.
Yeah, let's look at indices. Not got a clue what the FTSE 100 is made up of. Funny that. No, it's obviously it's struggling to really break this resistance up at 72.35. This is on the weekly chart. Let's at how we're performing over the 4-hour chart, we are seeing this move up. There is supportive trend line. There is a supportive trend line coming through as well. It's coming in now around about 71.30. But really, we've just formed a bit of a shooting star candle up here at 7,200, bit of a psychological level. But it feels like the indices are again still remain pretty buoyant. We're running into resistance, but dip buying is not going away anytime soon. And we've also seen the Dow actually target this level just above the 35,500 level. It's stalled again and reversed lower, but we are getting a bit of a triangle formation. Now, we all know where prices have come from. They've come from way down here. So triangle formations tend to follow the move. So we expect that to break higher. Support coming in around about 35,300 at the moment. Dip buying in front of there. A break of 35,170 would concern me, maybe a bit more of a deeper retracement. But really nothing feels like this is going to slow this train down. New all-time highs as we see in the Nasdaq, just got above 15,700, 708 is the high now, and the S&Ps also new all-time highs posted in the last couple of days, 45.51. Aussie 200, we're still in this sort of sideways channel formation, potential flag, but it looks like dips getting bought again over the last 4 hours. We formed a bit of a bullish hammer here. The China 50, as Joe mentioned, a positive effect. We've broken above the 15,267 resistance. That acts as support and was retested, formed a bullish hammer and is kicked on. Next level of resistance, 15,706. So China recovering nicely there. Hang Seng also recovering. We've got a bit of a potential trend line. We can say it's actually a trend line, 1, 2, 3, 4 touches on that. Support is way below. We're pushing above previous resistances, and the next real target is 26,824 on the Hang Seng. Nikkei has stalled at the resistance level that we had in. Can't even see where that resistance level came from. Where is that from? Don't know. It's stalled there anyway. But let's get rid of that if we haven't got a good reason for it to be there. But we have formed a bit of a topping pattern. Potential for a pullback lower, but probably find support around about the 29,500 level, so about 350 points lower than where we are now. Retested that support should lead to an extension higher. So these impulsive moves continue. No reason really to think of anything else but buying dips or holding on to longs if you've got them in the indices. Over to you, Joe.
Lovely, Steve. Fantastic roundup there. Bit of a tough act for me to follow, I think. I'm really going to start upping my game based on your aluminium wheat chat. Right, okay, dollar index starting point. So yesterday we did see a bit of a turnaround. We posted a green candle for the first time in 5 sessions, and seemed to have found some support at the trend support line, which began down at these lows here that we posted back in May. Number of touch points down here. And we've got the latest touch point that was posted on the 3rd. Pushing higher again today, up by 0.1% as it stands. Keep an eye on this corrective channel that we formed in the very short term. If we can break out of that, then I think we might see some renewed impetus on the upside from the dollar index in the short term. In terms of where we wanted to get to, the 93.43 level was the big level for me to watch. When we saw this impulsive move through it on the 19th of August, I thought, right, that's it. We've completed this double bottom and we can start heading higher. But that was a big bluff, a big false move, and we saw it correct pretty sharply from there. So now we have a new line to target, or new level of resistance to target at 93.73, which we need to overcome to really, complete this double bottom pattern that we've been harping on about what feels like for months. Double bottom, so bottom down here, neckline was here, false break, but now we've got a new level up at 93.73. So if we can break that, kind of clears the way for some renewed upside over the more medium term. So looking positive today. Whether or not it will hold on, we have to wait and see. Euro dollar has stalled into these resistance levels that we mentioned yesterday, notably this 38.2% fib level, which is the light blue line from the highs of the right shoulder down to the latest swing low at the 19th of August. Nice shooting star candle posted there. We've also got the previous swing high from the 30th of July, which has acted as resistance, and we are moving lower. Again, corrective channel formed here. Whether or not it breaks this will be whether or not we do see a continued move to the downside. I think if we see a nice close outside of this channel, then we can start looking for a move back down to these recent lows. Volumes haven't been particularly great on this move up, which is a bit of an indication that this was probably likely to fail. And I think we're going to see it capped at these levels here. Risk assets have been pushing higher. Aussie, New Zealand dollar been having fantastic runs of late, but they look as though they're starting to roll over now. Aussie yen looks quite interested. These are levels that I drew on a few days ago, but they seem to be doing a pretty good job. I drew on a big band of resistance between this sort of cluster of levels that I felt it would need to do quite a lot to overcome. Certainly given how strong this move's been, and expected to run out of a bit of steam, and it appears as though it's doing that now. Yesterday we posted a doji. Today we've got some renewed downside momentum, down by 0.22% on this at the moment. So for me, it's rallied into the retest of this broken range on Aussie yen, and we're actually looking for opportunities to sell that now, expecting a move back down to test these lows that we posted on the 20th of August. Aussie dollar looks quite interesting as well. This has, for me, completed a head and shoulders top, and arguably what we're seeing here is a decent retest towards the neckline of this. We've got two 38.2% fib levels. The first one from the right shoulder, and the second one from the head, down to this swing low that was posted on the 20th of August. And again, drawn a bit of a range on here that I expected price to stall, and it appears to be doing that. We've got a very sharp uptrend line that's been posted in recent sessions. So if we can break that, then I think that may be a trigger for more downside back towards these swing lows down at 71.06. The New Zealand currencies that we talked about, Steve, we talked about New Zealand dollar Swiss because it had 10 up days in a row. Well, finally, it failed yesterday. We posted a red candle, and we're backing it up with further downside today. So that rallied basically pretty much into that swing high that we posted on the 6th of July and has failed. So we've seen the sellers step in, and now I would expect there to be some, fairly decent correction given how sharp this uptrend move has been. It's such a narrow channel there that it's formed, and the volumes haven't been particularly great. So I think if we get a clean break of this on the daily chart on the close today, then this will trigger a bit of downside momentum in the short term. So we need to see whether it's going to retest this broken channel or whether or not we are going to see a continuation lower. So time will tell. New Zealand dollar, US dollar is the other one. Rallied into trend resistance and a cluster of sort of fib levels. Again, bit of a range of resistance levels that I had drawn on the chart, and it seems to have failed into these levels. So I think there is scope for corrective moves on some of these riskier assets that have had some really sharp upside moves in recent weeks. So all becoming a bit more interesting. I think maybe a bit of a turn is approaching. Obviously, a lot of it's going to be led by what the dollar index does, which is on the front foot today. That's it from me on the FX front.
Nice one, Joe.
Okay, so gun to the head trades yesterday. I went short of New Zealand dollar, US dollar. It is starting to sell off, but I didn't capture much of it yesterday. Only 8 ticks or 0.25R at the 9 p.m. close. And unfortunately, Steve, you stopped out on gold. That did have a bit of a setback, as you mentioned earlier. Anything that's taken your eye today that you want to have a stab at?
Yeah, there's a couple
if I
of
was
things.
to put a gun to your head.
Yeah, of course. Now there is a couple of things. The one thing I was looking at cable, sterling dollar. We've just broken down through the support. Funny enough, Mona is on an intraday trade ideas has sold a break here at 38.20. That's playing out quite nicely already. And if you look at the daily candles, the shooting star bearish engulfing, and this looks negative as well. So, and we've got a crossover on the stochastics RSI, so correcting from the overbought conditions looks promising. So that's one I'd look at.
I probably should have spoke about that, shouldn't I?
Well, that's all right. It's
dovetailing.
sort of like, Yeah, dovetailing, exactly. However, the 4-hour chart, there will be a little bit of support around about 138, the figure. I might just go for this, Joe, because it's one that sort of like tickled my fancy when I saw Mona doing it, because she's a pretty sharp analyst. I'm going to go, my stop's going to be a lot tighter than hers, though. Let's have a target at 137.80. Am I going to have a 12 tick stop from here? It's not a lot, is it? 3-to-1 risk reward. That's not a lot. Let's go a little bit punchier. 18 tick stop. So yeah, above this candle that's just broken. So looking to get short here at 138.16.2, stop at 138.34.2, and targeting 137.80.2. That's me on 2-to-1 risk reward on cable.
Lovely. Good luck. I'm going to take a look at New Zealand dollar, US dollar again. So I did it yesterday and I'm going to back it up again today, purely because what I'm seeing on the daily chart is quite interesting. It's rallied into these resistance levels, and I think there is scope for a little bit more downside on that. So looking at the intraday charts, what I'm targeting here is a 38.2% Fibonacci retracement level of this big swing move, move higher that we've seen in recent days. So that comes in at 70.31. So from a risk, to make the risk reward more appealing, I'm going to set it now at 71.17. But I need to have quite a tight stop just above the highs posted in the early hours of this morning at 71.57. So just looking for a touch over 2-to-1 on that one today.
Nice.
Okay, day ahead. So we've got the German ZEW index due out at 10 a.m. today. The economic sentiment is expected to fall to 40.1. So keep an eye out for that and anything euro related come 10 a.m. today. Other than that, looks pretty quiet. Obviously, the US will be coming back from their Labor Day holiday. So we could start seeing some interesting moves in the equity markets, and all those dip buyers can get back on it in the US.
Yeah, exactly.
I think that's it from us, Steve.
Yeah, lovely. All right, well, see you all in
10 days, is it?
Yeah, well,
cool.
Yeah, might work out more than that if I include weekends.
Don't be greedy now.
Yeah.
All right, have a fantastic break,
Cheers.
mate. Well earned, and yeah, catch you when you get back.
Lovely. Cheers.
Cheers, bye.